Hello, and welcome to Urban Hood Money Talk. It's a fact that we need money to enjoy life and focus on the things that we really like. I am your co host, Allie, and I'm here with Mushi Buyan. Our mission is helping you gain financial freedom. You're listening to one of our special weekly market talks, which provides news on the upcoming week that may be important to traders. And we're super excited that you're here with us.
Hello, everyone. I am Mushi Buyan, founder of this nonprofit organization, urbanhood.org. We are a financial literacy not-for-profit organization, and our parent organization is a food bank, Urban Food Alliance. Everything I'm sharing educational purpose only. We are not offering any financial advice. So let's see what happened last week. Some of you already have seen great in your account in a portfolio that this is since March 2020. This is the first time that in a week, the highest growth in S&P and Dow Jones, it happens within a week.
I thought the week was November of last year.
Yeah.
This is the largest growth since the November.
And including November last year also, the way this week happened, NASDAQ was almost 6% up in 2 days. That's the reason there. If you look at some of the statistics, media, they're saying, since March 2022, this is the highest growth in a week because of those last 2 days, and NASDAQ 6% growth for the week. So Dow Jones market is cheering what Fed decided this week. We knew that it's gonna happen, but until on Wednesday, Fed announced that they are going to increase 25 base point next 7 and consecutive this year. They're going to be increased, and next year also they are going to be continue doing this, hopefully to control the inflation. So S&P went to 1.1% up, Dow Jones almost 1%, and NASDAQ was 2% up this week. See that while it was under control, it did go down below 110, but overall this week, as you can see, S&P was 6.2%, NASDAQ 8 growth in a week. That's so quick. Some place else I saw is 6%, but within the range. So this way it gives you some idea. All of a sudden we have so quick growth this week since Wednesday, Thursday, and Friday. And that aligned with also that JP Morgan, some of the analysts officially saying they think this year, if economy is growing the way it is going, and the war is not going out of control in Ukraine, we might see that it's touching, close to 5,000. So we are looking at, Fed policy rate and CPI rate that there you can see, if you look at that, all the chart, where is that CPI and Fed policy rate, you'll see that year over year that inflation is almost close to 8% and above, touching close to 10%, but same time when Fed increased the rate this year for a long time, since 2018, it did not go higher. Now, if you see that, how can they control this reduce the rate on the Fed side? So they have to start looking at increasing the rate, and we know the market was trading as if it's going to 25 basis point, no more surprise, although some expected maybe Fed might be more bullish, raising 50 basis point and so on, and that might cause more panic that the Fed is going over aggressive to bring back to that CPI below 2% or around 2%. That this coming year, when Fed said 7 times they're going to be increasing, and next year they did mention 4 times they're going to be increasing in 2023, to keep that rate controlled within this 2.6, 2.5, that range. And none so far, according to Fed, the way the economy is growing, they don't see that we are heading to recession, and hopefully there won't be any surprise. But as we all know that, nobody can tell what's going to happen in few weeks, or when they increase this rate, usually you see it takes around 6 months to 9 months to see that economic effect, what else areas that they are slowing down, and they have to plan according to like that. So we have seen that in 1987, 89 also, that if you will review any chart, looking back to in the history, 87, 89, what happened when there was similar type of situation happened, inflation was way over 10%, 12%. They had to increase that time, the rate 12 times. In 2004 to 2006, similar thing happened. They increased the Fed increased the rate about 17 times. And 2015 to 2018, it was around 9 times. So if you look historically back, and then did we ever have this situation? How did they control the situation? But around that time, now why markets celebrated what Fed is doing? Powell announced that, hey, this is what we are looking to do around 10 times or 11 times. We're going to be increasing this year, next year. And then we think that economy is still growing in a healthy state. We do not see that there is a recession or sign of recession happening, because of some of the earnings we have seen came out very strong. Growth and value is still working hand in hand. And hence, yep, there are some challenges, supply chain, employment, others that we're going to touch on later on, but it is going on track. That's why the market is kind of celebrated.
We only have 5 data points.
Mhm.
Is that, every hiking cycle has had different economic conditions, right? So how reliable is that? Is just the 5 data points?
When you say 5 data points, you mean the hikes and change in policy?
Yeah, I mean, we're looking at
Right.
5 cycles.
Right.
I mean, that's not a whole lot. Statistically, I'd like to see about 32 data points, results more statistically applicable. So I'm not thinking with very different economic conditions. How applicable is this? I mean, obviously, it's nice to be able to go back to the past and say, hey, every time we went through the cycle, we came out okay, and it may very well happen the same way.
Mhm.
But we only have 5 data points.
Can I make a couple of comments on that?
Yeah.
So the reason you're going to have very few data points is because the Fed is not going to hike 10 times, 12 times, and have a whole bunch of like 30 different times that they do it that way.
Mhm.
So it's going to be a few,
Yeah.
data points. But the secondly is, if you go back a little bit longer, all of these hikes where the reason they hike is nothing to do with inflation. Inflation was not even a problem back then.
Mhm.
But if you go to the 70s, like 73, they hiked this amount and the market dropped so big. So the reason the hikes are there is very important. If they hike because, they want to get growth a little bit in control, that's good for the market. But if they're hiking to control inflation, regardless of growth, that's a different story. So if you had the 70s in here, you're going to see a whole bunch of hikes and like big drops in S&P. So just keep in mind that these are all rate hikes without an inflation problem. That's the only thing.
Yeah, thank you, Julio. Yeah, the
Sure.
main point on here is just look at the number of hikes they are doing in order to keep the inflation in control, and also saying, hey, look, with this hike, it's not like all of a sudden market drops tremendously, and then we are doing the best we can to support that inflation and support other areas where they feel like, okay, they can still work on, improve, to boost up, not to scare off the growth economy, because we still have a huge success. If last 4 quarters you're looking at during 2019 COVID, what happens, it's a different beast we're dealing with. So this is a scenario no one ever have seen it in the past. But what happened in March 20, market went drop like crazy, and then it came back in a V-shaped recovery, right? And then it's keep going up. And then there are certain businesses is figure out a way that is still they're expanding the economy and growing at the same time. Others are with others suffering. So that's when the Fed was keep pumping all the 120 billion in every month to boost in the market. of course they had to be in control of this QE monetary policy. And that's when they say, okay, now look at this data point, 10 times, 9 points, they do it. And then some of the things that earlier Julio mentioned that, yeah, Fed is we are going to try to balance sheet.
I've been thinking very hard about something I just wanted to share. I think different parts of the market are going to be affected differently in, each one of these 5 data points. There were different things going on. So I'm going to try to simplify my train of thought. A 2-liter bottle of Coca-Cola. When we get raging inflation, which maybe the closest was in the 1970s, 71, right? When you get a Coca-Cola bottle that sells for $1 and you get raging inflation and it starts selling for $1.50 or $2 within a year, okay? Let's look at the valuation of the consumer cyclical companies. So what happens? So now the price of the product went almost to double. These companies want to maintain a specific percentage margin. So let's say 10% margin. So all of a sudden their earnings have doubled in a year, right? In relative terms. So is that reflected in the stock price? I understand that interest rate hikes will affect emerging NASDAQ companies more, right? But the consumer cyclicals should be booming, in my opinion. The stock should reflect that. It will still reflect because they're okay. So I've worked in public companies like public on NASDAQ, right? Medium-sized companies. Here's what we do. Our goal every quarter is to, of course, what do we care about? The top line, bottom line, right? And profitability and marginality, right? The gross margin. What happens? So when the market inflates, like let's talk about the days of Cisco, okay? Cisco management tried to maintain a 40% gross margin, whatever happens. In other words, if labor goes up, the product sale price goes up, the goal is to maintain a 40% product margin. So if we go back to the Coca-Cola bottle theory, if they're selling the Coca-Cola now for $2 and they're paying more labor and everything, they still want to maintain, let's say, a 10% margin. 10% of $1 is 10 cents. 10% of $2 is 20 cents. And that will be reflected in the stock price.
But that Coca-Cola quantity of selling that Coca-Cola, are they able to maintain the same number? Now you won't find if they keep
increasing the price. Yes, they always do. They always do. Look, they're in business to make money. They're not in business for charity and to lose money.
Sergey, imagine this. How many restaurants do you see that is still their full-fledged back to before 2019? To sell that Coca-Cola, they have to have that many volume on sale. How many you see that happening?
I'll tell you this. My kids, when they ask for Coca-Cola, I go to the supermarket and I'm going to buy it, whether it's $1 or $1.50.
But you are talking about supermarket. I'm talking about the Coca-Cola is in supermarket is not their main business consumer. Because they have all the business industry companies are still people are working from home. How many people consume Coca-Cola when you are at home? Let's say at work. I know that when I was with Microsoft, I was with Accenture, I was Merrill Lynch, so we had all the unlimited drink and stuff supplied. Now we do not have consumer we are not consuming that because we don't go to office.
So you're saying, okay, so your counter argument is the volume will drop.
Yes, volume dropped. Okay. You can buy grocery, and of course that at the end, some of the business figured out a way to maintain, but they saw maintain be in the business, but then that extra cost they pass it to the consumer. They're willing to buy it, but their volume is not there. Because volume is not there, Coca-Cola's fault that Accenture or Microsoft or Google, their employees are working from home. But when everything turn around, you might see this bigger, but the number what you are projecting. Now they're not seeing that. That's why in cyclical sector, a lot of stocks still are not there yet. Here, what you are looking at, unemployment number, job opening number. Since 2001 and 2022, if you look at last almost like 20 years, hopefully it gives you that look at unemployment number at some point around 22, that a lot of people did not want to go to work and just stay there. But slowly, it's been 2021. Then since COVID is getting under control, that number went down, unemployment number. At the same time, when unemployment or when number is going down, the more and more job opening number, you see that since 2020, that there are more new jobs coming in. Now business figured out a way that, hey, it looks like we are out of this whole another shutdown like China, and the COVID is there. So more opening you're hearing from different states, no mask law, and business are giving people that option. Not government is not forcing you that you have to have your mask on to go public places. If that happens, then more openings also coming up. So that's in labor market, they are seeing that more people are participating. And here, what you are looking at, when you have a huge amount of money saving there, now people are making a choice. Do I spend my money on the durables product, or the one I have to buy a new house, or I have to buy a new vehicle? Look at that curve. But if you look at it, since 2020, everything went down. People are not putting that big money that buying a new car. We know the demand of the new car is they're not able to supply what demand there. The number went down. We see the houses number also is like demand and supply. It's not that many inventory outside. People are realizing do they want to buy a house or just live where they're at and just see what happens to the economy. 2 week what's going to happen? No, we have seen that last week all of a sudden big jump happened, but watch out what will happen that tomorrow, or not tomorrow, on Monday, when Powell is going to be speaking around 11 o'clock. Again, he's going to get questioned and there, if he says something that is going to scare people off, you might see another surprise might happen.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.